We're off bargain hunting now in the AIM market with Fundamental Asset Management's Chris Boxall, who runs a portfolio service for inheritance tax purposes. And I know you're always looking out for a bargain.
Absolutely, like bargains, and it's been tough to find them on AIM over the last few months. But the recent sell-off, I think, it creates an interesting environment.
Yes, it's always interesting when you do get a sell-off. Sometimes there's a reason for it, and other times you get the traditional sort of baby thrown out with the bathwater thing. So it does provide opportunities.
Typically with small caps as well, they're not terribly liquid. So if there's a sell-off, just a few small trades, and bang, you've lost 10%, which is great. You know, it's great news. We're long-term holders. And when things come off irrationally, you want to be in there looking closely at them.
The thing about this is, just before we get into your picks, it's made all the more difficult for a fund manager because you've got to have, or portfolio manager, you've got to have money sitting on the sidelines, haven't you, ready to take advantage of this?
Absolutely. And it's a very interesting thing you mentioned there, because we run different pots of money. We invest in AIM for inheritance tax planning, and we have there, you've got to be in the market all the time. So we don't have much free capital, but then again, we're never out. So we're in all the time. There's nowhere to hide. When you get a time like this, you just have to sit on your hands and sit there quietly and just soak it up. Or encourage your clients to think, well, now is a good time to add some more money. We also run general money where it's more flexible, where we've got more cash on the sidelines, where we can take advantage of opportunities like this.
Well, let's take a look at some of these that you're looking at the moment. I think the first one you wanted us to bring up was AB Dynamics. Now, we have spoken about this before, but I can't remember precisely when it was we last spoke about it. I guess it's the back end of last year. But since this period here where we were probably last talking about it, we've seen this further drop.
Yeah, AB Dynamics is a lovely little business. It's involved in the design, manufacturing of testing equipment for the automotive sector, for automotive R&D. So that it's really been in a sweet spot. Move to autonomous vehicles, EVs. It supports all the leading motor manufacturers, and it's been growing terrifically. Last year, numbers are up about 50-odd%. The top line. It makes beautiful 20% plus operating margin. It's got loads of cash. It's been redeploying cash into new manufacturing facilities. It's really been a fantastic story for AIM. It's a sort of poster child for AIM, listed at market cap of, I don't know, 12, 15 million. It's now over 400 million, and it got even higher. It has raised new money, a little bit of new money on the way, but all for the right purposes. It's always retained cash in the bank, and it's bought a few other businesses in its sector as well. And it was really, as you can tell on the chart, well liked by everyone, onwards and upwards. But literally, lately, it's just fallen off a bit, and the coronavirus has given another whack. Now, this could be a great opportunity to, if you're a long-term holder and you want exposure to this sector, to pick up AB Dynamics on a lot cheaper than it used to be. And it is operating in a terrifically exciting sector. So I would urge people to take a really close look at it. Insiders still own 20-odd%. The founder, Tony Best's got a big holding in there, as other management, although he has sold down a bit, but it's still a material holding.
Do you hold? You're a long-term holder?
We're a long-term holder of this. I visited the site, their very crammed site, not long after IPO down in Bradford-on-Avon. And since then, they've invested in a new site, and they've got another one going up with planning permission for another one. And a terrific story. It ticks a lot of the boxes you want to see in a smaller company, addressing a high growth market, big insider ownership, who's remained there, all the right margins, loads of cash coming through, supplies all the good and the great of the automotive sector. So a lot to like about that little business.
Let's move into the financial regulated sector and go for a company that you've want to talk about called Argentex Group.
Yeah, this is an FX provider to SMEs. So it does foreign exchange for for corporates. Typically those people converting $1 million to sort of 500 million a year of currency, and also for high net worth individuals. It's therefore not a travel FX broker, say. It's working with business. The largest exposure, 30-odd%, is to the retail sector. So it is converting currency for companies. And you can tell it was all going swimmingly. It's again, and then we've had a worry of virus, and bang, it's taken a big hit. Now, it hasn't announced anything recently. It's, if anything, the last announcements were very positive. It generates very high margins, high returns on equity. Founders are in there as well with a very big stake. And I'm not sure how much, for example, their business is necessarily affected in the short term by the coronavirus. Yeah. We will see, get more clarification on it. If anything, it's their retail sector. UK retail sector is probably more worrying, but that's been ever present, and that hasn't stopped the shares. It's a very nice, high growth business operating in a huge sector, which is tiny. So the opportunity is immense for it. The banks.
So does it compete against the likes of Barcap or Barclays Capital?
Yeah, it competes against Barclays. However, Barclays supports its kind of activities as well. Barclays essentially don't want to deal with lots and lots of customers, the likes of the Barclays of this world. So it works both sides. Argentex is dealing with through the big banks. That's its route to FX. But it's taking all the customer and the sales bit. So effectively what you've got is a niftier, more aggressive, more efficiently run sales operation, which is corralling all the customers and then using the big bank systems to do the other bit. But it's got a minuscule share, so loads of opportunity to grow.
It's interesting, if we bring up this share price again, I want to focus in on this part you were just talking about then and bring on another share price, if you can just keep that in mind, Alpha FX Group. Now this is interesting. I bring this up purely because we were talking before we went to air about this and you wanted to highlight the fact that Argentex has got this drop here, but Alpha FX seems to have sustained.
I find this very unusual. Now I know their businesses are similar, very, very similar, but also a little bit different. Alpha FX provides currency management, so it's not just the exchanges, but currency management also for corporates. It's got some other bells and whistles that it's adding. It's got a new Alpha Pay side, lovely, bubbly business, well run, founder insiders in there as well. We were very impressed when we visited their headquarters. You know, it really, again, it ticks a lot of boxes that we like. However, we find it's on a double the rating now to Argentex. It's been on the market a bit longer, but this thing, Alpha FX, is trading at sort of 35, 36 times next year's forecast earnings, growing very, very fast as well, a little bit quicker than Argentex. But we would have expected, given the very high rating and the FX exposure and the way this has been driven up, we'd have expected at least some profit taking around the latest hits. But it's just remained incredibly steady.
So you're saying this is expensive compared to
on an earnings level it is, but its growth profile to us justifies the rating. And if you see what it's adding on to it now, the ancillary bits it's adding onto its core currency management, we think but we also think that Argentex justifies a higher rating as well. So it is doing a bit more than Argentex, but the dynamics, the exposure, the FX exposure is there for both. I would have expected it to have taken a bit of a whack, but it hasn't.
No. Okay, let's move sectors. Dart Group is your next one. Which
this is a business that's clearly in the vanguard of the current sell-off. Dart Group is a leisure travel business. It runs Jet2.com and Jet2 Holidays. Jet.com and Jet2 Holidays. So it's really had a tough time. Just before the recent sell-off, a month or so before, it announced terrific results with meaningful upgrades to earnings estimate, and that's clearly meaningless now because in the face of the drop-off in holiday and travels, people are very, very worried. Now, clearly that is a concern. However, this business has proved itself through the toughest of times. It's still got its founder who owns a huge, circa 50% of the business. Right. It's a very substantial AIM company. Market cap's still 1.6 billion. So it's a big business. It's got 100 airplanes now in its fleet, and it's well ahead of the game relative to EasyJet in offering holidays. So Dart Group has demonstrated how to make the most of your assets, fill the planes, because it had its holiday company going much sooner than EasyJet. The EasyJet have only just launched their holiday package.
Isn't this an area which a number of investors have got burnt in with the likes of Thomas Cook? There's a lot of these travel companies that are finding they're going tough. TUI's just disappeared out of the FTSE 100 down to 250.
Difference is the Dart has a very prudent balance sheet as well. I think the last reported results it had already collected 600 million plus from client deposits for their holidays.
Right.
That's far stickier than short-term travel. So it's far stickier than say a Ryanair sort of structure, or even an EasyJet before it's initiated its holiday offering. So I think this could present a really good opportunity. And people are going to start holidaying again. Maybe not doing it in the next month or 2 months.
This is the interesting point, isn't it? Don't try and catch a falling knife.
Yeah.
If this is a falling knife, I mean, it's got technically. Where are we now? 1151. It's fallen from 1947. You've got support all the way down here at 745. So potentially it's a whole chunk more to come out of it, technically.
Absolutely. Technically it has. And it is a bigger company, so there are some more technical. However, in my opinion, the latent support for this in the AMIHT space is quite interesting, because I think a lot of people there are some buying interest around.
You've got clients in this on your portfolio.
We've got we haven't been in it long, ironically. I mean, I was in it a long time ago, got out, sat back on the sidelines and saw this thing go skyward, and we haven't been in it long. Got an initial positive, and then it sold off.
You weren't to know where you're.
We like it. We think they're very, very good at what they do. They got a very small logistics business called Fowler Welsh Cool Chain as well, which lorries you may have seen on the road, but it's a tiny contributor to group profits. Okay. It's a very, very well-run business.
Yeah. Let's move into high tech with Dotdigital.
Yeah. Dotdigital is an email marketing company. You would have maybe seen it for its core product, which is Dotmailer, and it's expanded well beyond that. It calls itself an omni-channel marketing automation business now, which is a funny term.
This actually goes back all the way. I've got this back to 2012, so it gives a sort of context as to where we are.
It's a great little business, very high margins. Growing very strongly, notably overseas. So it's had a good presence in the UK. Now it's growing strongly in the US, around Europe, Asia Pacific, and it's just announced fabulous results. And I would have expected it to have held up better. I wouldn't have expected any selling around this, because it seems to be relatively detached from any virus concerns.
Does it pay a dividend?
Very, very small one. Essentially, it's very much a growth. So, and it has a huge growth opportunity. Yeah. Great margins. Founders no longer actively in the business, but still got a decent stake. The CEO was former FD. He seems a very safe pair of hands, and has been doing a very, very good job. And this, having really announced exceptional numbers, got a lot of cash as well, and generates a lot of cash. I would expect to see this growing materially over the next few years, and we're very happy holders and have been regular buyers. It's got lots of recurring revenue as well, so very sticky business, hard to turn off. Once you're embedded in this system, once all your data's in there, or your data, it'll take a lot for you to move, and especially when they're doing a very good job.
Let's move on to your last pick, K3 Capital Group. Another one of these we've spoken about before, but interesting actually. From the highs, this goes back to April 2018. The highs hit 398. We're at 207, but off the lows that we had in what was, as we've already mentioned, 2019, an awful year for these AIM stocks.
Yeah, K3 is a fair weather stock if ever I've seen one, and it should be quite fun for the traders, albeit that the free float's not huge. There's a big insiders hold about 40% of it, including the CEO. So it's a business and company sales specialist, and it's got a very slick marketing operation. It's been growing share, and it's taking business from the legacy accounting groups, but I call this a real fair weather stock. The minute there is a sign of trouble, if there's Brexit trouble, or if there's any worry that the economy is going to get even the slightest whack, K3, people just disappear. They just start selling it. And it
bounces back.
Yeah, and it bounces back, and it seems to be weathering the storms pretty well. Very low cost base. It's building up its retained client base as well, so there's a bit more visibility. But really, it's very transactional based. If the businesses sell, they get a cut, essentially, an introduction. Right. Is business activity going to decline materially? Is that kind of sales activity going to be materially hit with the coronavirus? Possibly, but this thing will bounce back again. Yeah, I'm absolutely certain.
Would you buy at these levels? I mean, you're a holder, aren't you?
Yeah, we're a small holder. It's not because it isn't terribly liquid, and we're aware of its foibles. So we're not going to jump in, but we have been buying a bit more. Yeah, it's a nice little story.
Yeah. Okay. All right, Chris. Thanks indeed for dropping by.
Pleasure.
Take a look at some of the bargains out there. And the AIM market at the moment, Chris Boxall is a portfolio manager of IHT portfolio specifically with fundamental asset management.